Hello everyone, my name is Paola Ortega and this is another edition of Global Talks. Today I have a special invitee that I am going to interview about private banking, a global outlook of 2026 and competitiveness in this sector for emerging markets. So I am going to welcome Katerina. She is the executive director of a leading Swiss bank. Welcome, Katerina. It's a pleasure to have you here.
Hi, Paula. Thank you very much for the invitation.
Many thanks. So before I start asking all these questions about like your vision of this sector that is evolving, and I am going to focus a bit on your theory of bears and bulls that I find super interesting. First, I'm going to ask you about yourself, about how it is to be a woman in this banking sector that is a bit challenging, you know. So tell us a bit about you.
Yes, where to start with? I will start that I liked maths at school. And actually, I wanted to become a mathematician, and I was preparing for that, but I didn't enter the faculty that I was looking at. And during this time, I had to have a job. So I applied for my corner bank in my place where I was living, and I got admitted. And this is how it all started. I got fascinated soon about this world. As you said, okay, dominated mainly by men. And slowly, from the corner bank of my neighborhood, I was quite ambitious to change. So I changed at least one bank in my home country, which is Greece. And soon after, I went internationally, and I have worked in many countries around Europe, like Denmark, Cyprus, Luxembourg, and now Switzerland for the last 10 years plus.
Wow. So you really are a great invitee of global talks. You know, you do have a global perspective. And Katerina, tell us a bit about wealth management. What it is that it's not that common to hear wealth management. And I think it's very interesting to have you because you bring this perspective of some concepts that are not in the day-to-day basis of many people. So tell us a bit what it is wealth management, what it is private banking, and tell us a bit about these trends that you are identifying in these two areas.
Yeah, actually, this is a topic that it is in our daily life at any aspect of it, because it has to do with finance. And finance, money is in our daily activities. Either we're using our credit cards or we make some transfers. And if you become a little bit more, let's say, sophisticated, you start investing in capital markets, and I mean in the more advanced part of it, in alternative investments. And nowadays it's not like we knew alternative investments in the past, which was only gold, oil, or hedge funds. Nowadays we speak about cryptocurrencies and many other alternative investments.
Totally, because when we think about finance, the concept that it comes to mind is how am I going to finance the next credit cards of Christmas? But it is true that currently we are going to talk about like investments, as you mentioned. And can you set the stage of explaining about private banking in Europe and how it has evolved in the recent years, about expectations, regulation, digitalization? You mentioned it, cryptocurrencies, and a lot is happening, and the world is transforming super fast. So give us a bit of perspective about that.
Yeah, exactly. And what has changed the recent years, definitely after what happened in 2008, is that a lot of regulations entered into the US and European markets. And that was a very good thing to have, because we don't face today the same type of risks that we faced back then, because we learned our lessons out of it. Now, one thing are the regulations, but on the other hand, other type of risks emerged, like as I said before, the cryptocurrencies, for example, or other things that have to do with what we say in our language, cross-border. What does it mean? It means that people now, they move from one country to another, they live in one, they have income in another, they invest in a third, and this automatically creates some further skills for us and needs for the clients.
Wow, it is a very interesting perspective, because I have not thought that even us, we are all the time doing things borders, and that's super interesting. And how do you manage it? I imagine you being like the executive director of a bank. The traditional way is, okay, I compete with my traditional banks here locally, but now you're in a global scenario. Like, how is your approach to keep this fidelity?
The fidelity, and I will start with that, which is, I mean, in our job, everything is about fidelity to our clients mainly and trust. Now, regarding the international aspect, what helped me is that I said in the beginning, I had to change some, or also from my ambition to change living and working in several countries, where I identified also myself the need of having, let's say, some relationships, banking relationships at a place that is above the local aspect. And what does it mean? It means that, for example, I will tell you the example of my home country, Greece, that a foreigner is very difficult to go and open an account. So that's why it's not by accident that where I spent the last 10 years and I enjoy working at this place in Switzerland. Switzerland is used to have a lot of clients from all around the world, and to treat them in a way that is super legal, not only from the Swiss perspective, but also from their home country perspective. And this provides security also to us, of course, to make our work on a legal way, but also from the client's perspective, because they know that they will not face any issues with their home countries.
And here I am going to ask you something. Do you think that this Swiss way of doing things, like thinking globally, applies to other countries? Do you think that other countries should be more open? Because it's not, for example, the US way, that they are more close, like protective, or even Ecuador. We are very protective of the money coming out, because, of course, we have to take care of the local currency, and we have to try to make it stable, the economy. But there's the other approach that says, okay, globalization is there, and people want to make decisions that suits their best interest, so do you think that it applies, or it's particular to each country?
I would say that it's, let's say, a little bit more, of course, country by country, but also region by region. As you know, for example, Ecuador, I would put into a context of emerging markets, and US is another big mammoth, and Europe is a little bit another situation. And each region has some specificities. For example, in the recent years, regulations emerged heavily in Europe, and this provided the necessary stability. In US, of course, they have their own way of working. The sizes there are completely different. Imagine that one company, even take, I will tell you, Roche, Novartis, the pharmaceutical, or L'Oreal, talking for cosmetics, it's super small size comparing to NVIDIA or other tech companies in US. And then we take the region of Latin America, where it's a region with its own, let's say, style of working. And there, I can say that because we work also with clients from Latin America, apparently, and we hear them, and what they say to us that their problems is that there is no real stability, and they have entrepreneurs in Latin America where, I mean, some of them, of course, they're doing great everywhere. The good people and the good professionals, they find their way, but they have really to struggle to find the way in an environment which is not stable, and in an environment that regulations and the rules and laws are changing quite often. And I can say that being Greek, because nowadays Greece has become, of course, more matured European country, but it was, I can compare it with let's say regions like Latin America before that the laws were changing, where the entrepreneurs they were doing their strategy for the next 10 years, but in the year 3 or 4 the laws were changing, and then nobody can thrive into this environment.
Of course. And about wealth management. So, what are your vision about global trends that are shaping wealth management today?
As I said, local trends, current trends, is mobility. Number one is super important because the wealth that the parents created, most probably, in many cases, are not gonna end up in the same country where the parents were living. First, let's take it that way. With all these digital nomads and not only traveling, moving for work. So this is one thing that we take into big consideration. Of course, the other thing that we take into consideration and we are working on, all banks are working on, and not only banks, is the artificial intelligence. Yeah, this is where the bankers or the banker is not the banker that we used to know, years and ages before. It's a person who becomes more strategist, a psychologist in many cases, and but the human but not error aspect is what we believe that is going to be super important, because no AI can empathy a family who they face conflicts between their members regarding the succession, or how let's say if the family has companies that, and they have 3 4 kids, and they have 1 2 marriages. So all of these things, we invite them nowadays to put, let's say, we play the role of a neutral entity to make them think of these questions, and in certain cases we can arrange to put a governance of the family. This is something that I have not seen it, to be honest, in let's say smaller sizes, or and I have to give it again the example of Greece, because this is where the banking system, I know it. The banks are continuing working a little bit more the old way rather than the modern way of working, and seeing the future, what is coming.
Totally. I actually, in the context of an event that we're having, that it's the future, the global future commerce, we are bringing a specialist in economic psychology, and it is interesting because it's a new area that is growing so fast, and even boarding of companies are increasingly including this kind of profiles in their team, and also geopolitical views, because it starts to be more and more relevant. So, Katerina, to end this interview, I want to ask you about bulls and bears going into 2026. Your macro outlook is super interesting, and I want you to explain a bit about it.
Yes, I think you mentioned, because you saw my small teaser at LinkedIn, which I gave,
It was
and
super
again,
interesting.
thank you. I in purpose, it was a short teaser, and I will explain you why. Because I'm how we say it in English, sick and tired of throughout my career to when markets are going well, there is always people which I call catastrophologists, and and actually their scenarios after 2008 has not realized, thank God, for us and for our clients and for the whole economy. Because, as I said, the situation is not similar to 2008 and cannot go back, because now there are a lot of steps that the governments are taking in order to avoid having another financial crisis, at least to the extent of 2008. Corrections, yes, but talking for corrections, we're talking for minus 5, 6, 10, 12%. If you want 15%, it's still a correction. We're not talking for, catastrophe of the markets. And I gave this teaser. Why? Because now we all hear that if AI is another bubble, I read in the news every day, or not. The only thing I have to say, AI is here to stay. I don't see any way of going back or out of AI. I can see what I also hear from the professionals, that now we are going AI, Chat GPT, OpenAI, DeepSeek was the first creators, and now we go to phase 2, which is going to be the AI agentic, meaning that the AI, the ChatGPT that we're using today, and we're saying, please give me the flights for tomorrow, the agentic AI is going to be able to book the flights also for you. And many, many other things, of course, towards that.
But at this point, I would like to ask you if you do think that it is overrated. The other day, I actually read about this investor and that has kind of predicted the bubble of 2008, and he actually is investing against AI, not saying that it's not going to happen, but saying that it's too overrated. Like it is like too much more than it is supposed to be. Like it's not that a big deal, that's kind of his approach. But it's interesting to kind of understand and at what point we are, and I cannot agree more with you. And the pandemic proved it. It is true that with the pandemic, everyone thought that it was going to be a big deal of a lot of defaults, and it showed that no, that regulations and banking mainly has learned from the past crisis and has done like a great job, and we didn't see the massive the massive broke of companies. So what's your perspective on this? Do you think it's overrated?
My answer to that is always the same. Diversification. When we're talking for a sector, for an industry, for a region, our advice as professionals is never to put all the eggs into the same basket. So, we don't have a crystal ball. First of all, we have fundamentals, and I will talk about the recent verse on the fundamentals. But the answer to that is diversification. Even if you are pro or against a specific sector, you can exclude it, let's say, from your portfolio, but the rest of your portfolio needs to be first of all, invested, and B, diversified.
Understood. So you were explaining about your view of bulls and bears. So maybe you can wrap up the idea.
So, of course, we follow our house view, and our house view, not only my bank, but every bank, we have our strategists that it's their job. There are a lot of people. They put down. They are working very structured. They meet every week, and when an event happens, of course, and they act accordingly, give us the guidelines what we need to do to protect our portfolios according to the let's say, what's happening, let's say, on the interest rates or on other political decisions for the next 6 to 12 to 18 months. We don't have, of course, a crystal ball to say what's going to happen in 10 years. But what we for 2026, because again, I heard a lot of catastrophologists. The fundamentals are the following: that we know that the US jobs in US are weakening. Those are the data that we have. We know that the Trump's administration, they have the midterm votes and is not going according to the statistics well. And we do know that the artificial intelligence continues to support the productivity into the companies where they use it. So based on these fundamentals, we believe that because, okay, US economy is the economy who drives all the others, that in such situation, Trump is going to try, of course, to win. Therefore, he is already, the administration takes a more easing on US easing policy on the currency, which means more liquidity in the markets, which means more growth, potential growth for the equities, for the companies. So we can only say, of course, is everything la vie en rose? No, we have, of course, fiscal stress. We have potential geopolitical issues that we cannot predict. So this is what we say. And before saying that, and the bulls and bears, I got not only my bank's opinion, but I also gather what our competitor banks or colleague banks are saying. And we all kind of more or less tend to say that 2026, we believe that it's going to be a cautiously bull market, meaning that we believe that we are going to have certain growth for the reasons that we discussed. And one more thing, because I talked about US, the thing is that the liquidity in US dollars make US dollar as a currency weaker. And weaker dollar, as you know, it also, but I mean, in Ecuador, of course, and in all Latin America, helps Europe and emerging markets.
Totally. With a weak dollar, what happens is that our exports become way more competitive there in foreign markets. And about competitiveness, what makes a financial system competitive?
Regulations and more regulations and stability and being boring from the political and regulatory point of view. Exactly like that, being boring. Boring is for the companies to thrive is good because they know. And not only the companies that are today, but the companies need to have a strategy for the next at least 10 years plus. And they need to know that what is as a law today is the same law, will be the same law after many years. And not that the new government that is going to come is going to change that law. And the competitiveness also comes with investing into talent. And countries that are losing talents, human talents, cannot go very long. So all these countries, they need to work on keeping the human talents that they have in their regions, in their countries. Because smart people, if they don't find, what the base to work in their home countries, it's the easiest thing to live nowadays.
Cheers for being boring. I hope we didn't bore our audience. And I really think that we have to have this long-term perspective. I love being boring if that's the case, because you can give like stability and a longer view, but also we can make it fun. So I hope you enjoyed this interview with Katerina. Katerina, many thanks for this interview. And thank you very much, everyone, for listening to us. And if you have any questions, we will be pleased to answer you. So thank you very much, Katerina.
Thank you, Paula. I enjoyed it very much.